Welcome, ladies and gentlemen, to Commodity TV here at the Precious Metal Summit Conference in Zurich, November 2024. And now we want to get an update because we have not talked of a long time from Ridgeline Minerals. And Chad Peters, the CEO, is here with us. Chad, great to have you here. Thanks for taking the time.
Yeah, thanks for having me.
Yeah, hope things are going well for you. Conference is good.
It's been a great conference. Yeah, Perfect. Lots of great investors. Yeah, it's been good.
Fantastic. So Ridgeline Minerals, I want to disclose I'm a shareholder of the company, of course. Yeah. And how was the year 2024 for you?
Yeah, 2024 was actually a pretty big year. You wouldn't know by looking at the share price, but it's actually was a pretty big developments for us. Not only did we see a really aggressive drill program go on at our Swift project, which is a joint venture between Newmont and Barrick. NGM, Nevada Gold Mines, is a joint venture between Newmont and Barrick. They optioned the project from us on a $30 million deal. They're now aggressively exploring that project. And we actually just announced some high-grade drill results that came out of that project last week. So first instance of high-grade on the project. It means that Swift could host the same type of mineralization that hosts multiple 10 to 20 million ounce gold mines in the district. So major development for the company, big validation of kind of the concept there. We also inked a $20 million US deal with South 32 on our Salina project. So that's another earn-in. So
that's part of your hybrid exploration.
Exactly.
Model, right?
Yeah, probably since when we last talked, when we updated with you, we were more of just a standard exploration company. And through this bear market, we understood that to really truly see exploration continue to be aggressive on our projects, we needed to bring in major partners that had access to capital regardless of how bad the markets were for the juniors, right? So with these joint ventures and this hybrid model, what it allows us to do is we participate in the projects in a very meaningful way by owning a fully carried interest all the way to commercial production on every deal that we do. So each project is either 20 to 25% fully carried interest. What that means is, big discoveries made, this turns into a potential mine in the future, it might be $1 billion to build that mine, right? And if as a minority joint venture partner, we would have to either participate or get diluted out of the project. By doing these free carries, what it means is we own a little bit less maybe than instead of trying to own 40%. But when that big price tag comes 5 years down the road to build that mine, we can just sit back and enjoy because that's going to be funded by our partners.
Wow. Okay, that's super. So you've done it now with 2 projects. What's going on with the other projects?
Well, actually, it's now 3. So we have $40 million US in deals with Nevada Gold Mines across 2 projects, Swift and Black Ridge. Both are Carlin-type gold plays. And then the Salina project is a polymetallic CRD, which is right in South 32's wheelhouse. So that's, again, a $20 million deal. So $60 million US in deals across 3 projects. We then also have the other side of the hybrid model. We also have 100% owned projects. So we're always bringing in staking new projects, acquiring assets and bringing them into the early part of our portfolio. We do that early stage work, define scale, define grade, try to show a real opportunity. And then depending on the scale of that opportunity, we either farm it out to a major or we advance it ourselves. If it's big enough, obviously, if it's an exciting enough discovery, we'll advance it ourselves, right? It's just dependent on every project.
Okay, super. And you said $60 million in those deals. Those 60 million go straight in the ground?
Straight in the ground. With the NGM deals, it's pure spending. Ridgeline actually runs the exploration for South 32 at Salina. So it's slightly different in that we retain a management fee. So for every dollar spent, we get 10%. On top of that, there's a few cash and milestone payments. So we'll look to probably recoup about 1.6 million US over a 5-year period at Salina, on top of the 8.9, give or take, that would get spent in the first phase of the deal. So it's a 2-phase deal.
Okay, super. What's the game plan for 2025? What are you planning on your projects?
Yeah, so in our own projects, we have a couple in the wings that we've been staking. We're currently consolidating land, putting that story together, all in Nevada. These ones are gold and copper focused. We're really excited about that early stage portfolio. I think it's got great potential. Then on top of that, with the recent success at Swift, as well as minimum earn-in requirements at the other 2 projects, we're going to see somewhere around, I think on the minimum, 5 to 7 million, but it could very well be closer to 7 to 10 million being spent across our 3 partner projects, which would be incredible. I mean, that's essentially our entire market cap right now in just in funding. So it's going to be a very big year for us. We're going to be drilling a few of our own projects, big spending coming out of our partner projects. And I just think, there's a lot of catalysts that are coming up. So it should be good.
Sounds like a lot of news flow.
It is. Yeah. We'll have to have an update again later this year.
Fantastic. So from the metal side, it's mostly gold, right?
Yeah. So we started as a pure just gold play. transitioned into, we felt that getting into the copper and the CRD space was a smart move, kind of with the energy transition, having exposure to copper, we feel is a good long-term move for the company. But I'd say we're still firmly a gold company. But we like to dip our toes into copper when we see an opportunity.
Super.
Yeah.
So after the election, do you think under the Trump administration, mining in the US might get a little bit more easier, also with the permitting?
Yeah. I mean, I think without a doubt, it's going to get easier to permit over the next 4 years. I think along with many people, you want to make sure that that's being done in a sustainable way, right? You want to make sure that permitting is still doing right by, shareholders, the local populations, making sure it's good for everyone, right? It's not just good for the mining company, but without a doubt, it's going to get easier to permit mines, going to get easier to get them into production. And I think that's a good thing for juniors like us.
Yeah, definitely. Super. Chad, thank you very much. It looks all good. A lot of news flow. We like that.
Yeah.
Hopefully you really hit every hole hits.
They all hit. That's forward looking, by the way, but yes. Yeah.
I like that.
Yeah.
Super. Okie dokie. All the best. Thank you very much.
Thank you.
Super. Yeah, ladies and gentlemen, it was Chad Peters, the CEO of Ridgeline Minerals. Yeah, you heard it. 3 projects are now in the hybrid exploration model together with South 32 and Nevada Gold Mines. So that's really fantastic. I think this is a great way to really do exploration, to save money, but still to be on a free carried interest with no obligation. That is great. And they also own 100% projects where the drills are turning. And the drills are turning, of course, on the joint ventures, I would call it. And so from that side, lots of news are coming. Check out the company. Thanks for watching us, and bye-bye from Zurich.